take a look at the bigger picture. Ed Siddell's with us, CEO and Chief Investment Advisor, EGSI Financial. Ed, good to see you. What do you make of it as we kick off here a new fourth quarter? Certainly already seeing some volatility. What stands out to you?
Well, thank you for having me back. You know, it's a mixed bag of tricks. I mean, we were just talking about energy and oil, and now all of a sudden it went from being extremely bullish to bearish. And I think a lot of people are really concerned with their expenditures every month, and that's really, causing a lot of the volatility in the market, especially when the Feds said that, they're going to have another rate hike, and the rate decreases are not going to be as large as originally expected in 2024. I think they're still going to happen, but it's creating a lot of volatility in the market.
So are you worried about a recession, and what kind of recession are we talking about?
Yeah, I talked about this silent recession. I mean, we all know it. We feel it, at the pumps, when we go to the grocery store. The Feds aren't ready to call it a recession yet, just like they weren't ready to talk about inflation, saying that it was transitory. So, these are the things that, as we continue to see job losses, Meta just announced, some more job losses. And those are the big, important jobs that have benefits, high paying, and they're being replaced by those jobs that are second and third jobs, where, typically in the retail and service sector. And we're going to see more of those jobs continue to show up, especially as we get close to the Christmas season. So I think we're going to have a recession. I'm not sure how bad it's going to be, but it's going to create opportunities.
Right. So as we talk about opportunities, before I get to the different sectors you do like or things you're watching, what about the regional banks? Because there's been a lot of scrutiny. They had a really tough time where we saw the market sell off in a big way in March. What goes on here now? What's your look ahead for this group?
It's still a big concern for me. You've got over $1 trillion of non-recourse loans that are coming due in the next 18 to 24 months. And that's going to create a lot of pressure on these smaller and regional banks. From a bigger perspective, that's really going to affect the economy, because it's those banks that provide the majority of the loans to small businesses, which is really the lifeblood of America. So, as those continue to hit, I think it's going to be a drag on the economy and really, unfortunately, add to the recession.
So you're worried about a credit crunch on the heels of what's going on with the regionals, particularly because they have this exposure to commercial real estate, for example, and you have a higher for longer Fed outlook. What do you think the Fed should do next?
You know what? Here's the problem. They're talking about raising it 25 basis points. The original estimate was cutting 100 basis points in rates next year. They reduced that to only cutting 50 basis points. But until we get spending under control, I mean, that's inflationary. We're spending over $1 trillion more per quarter than what we're bringing in. And so until we get the spending under control, I think inflation is going to be sticking around. Everyone keeps saying it's sticky. I think it's a little bit bigger than sticky.
Yeah, let's just go over the sectors you do like, that you do recommend at this time.
If we actually look at GDP, because GDP was up, and one of the main reasons it was those companies that are providing defense contracts to Ukraine. So, if you look back over time from World War II, Korea, Vietnam, and any kind of conflict, those companies, as well as any ancillary companies, they're doing very well, especially in times like this. I still like energy, even though it's looking like it's bearish. So as long as OPEC, continues to hold their production, I do not see the U.S. increasing production here. I mean, they continue to strangle the production in the Gulf of Mexico, as well as shipping. So, I think that might be a buy right now, especially, when you look at those high value stocks like dividends or like Exxon that are paying dividends.
Yeah, understood. Ed Siddell, thank you so much. EGSI Financial. Thank you, Ed.